Hello and welcome to today's daily educational video here at Forex.Academy. I'm your host Robert Blackwell and have the pleasure to walk you through today's daily education. Before we do so, please consult the following disclaimer. There is risk inherent trading the financial markets. And today we're going to discuss trading with technical confluence. Now, what does that mean? It really means we try and combine the skills necessary as technical traders using different technical indications. We're looking at the price action and trying to invest a technical idea to where that future market price is headed. So let's move across to our trading platform, and we're going to use one particular market in question today, looking at trading the Australian dollar against the US dollar. Okay, now the US dollar has been very strong over the course of the past 2 months. We have seen a short-term rise in the Australian dollar, a bit of a bounce in Aussie dollar strength in relation to the US dollar as well. So perhaps there is a trade here. How can we aim to support a view to trading this perhaps to the downside, given the dollar strength and given the technical setup we see, using the technical indicators, and of course using our idea of a market direction here. First and foremost, we'll look at the price action, guys, and we can start to input some of the data in terms of highs and lows within this market. So again, we'll use our support and resistance to see these lows as well, these long-term lows within the market. Again, looking at the candlesticks, rejecting these lows. If we zoom out on the price action, we can see that we have hit these long-term lows and are starting to bounce off this price action. But again, the overall trend structure in the medium term is certainly to the downside. Now, what do we see more specifically when we look at this price action? Well, apart from the trend, we do see a series of diagonal moves to the downside. Again, if you're a familiar fan of Elliott wave theory, you know that the market often moves in a diagonal motion with as expressed in waves here. So what we'll look in terms of identifying these waves on the technical price action, we have these highs rejected, okay? We have the trend to the downside. And then we have a series of these lower highs here. Okay, so we've 1, 2, 3, and now we're approaching a bit of a trend here to the downside again. We're just approaching those levels. So the question is, for us as technical traders, what is price action more likely to do at this area in terms of the overall medium or long-term structure of the market? Again, we look at the price action, but we try and derive an estimation of a technical trade from technical confluence using a series of technical indicators to describe how this market may move. So the first thing we'll do, again, we've just established a trend. We can use our diagonal price channel to look at this potential diagonal move in the market again. And again, if we're looking to stretch it over a long period of time, we can say that we have something quite consistent there. We're now at these prices now are 76.60 in this market and are looking for a trade. Again, if we look to accompany that with a trend to the downside, we can see we have a bit of a price channel here moving to the downside as well, albeit it's trading within that range. So are we looking for the breakout trade, or are we looking to follow a potential continuation of the trend to the downside? So what we'll use again is go to insert, and we'll look at different indicators here. Perhaps if we believe that it's going to bounce off this area, we'll maybe look for some signals to suggest that is likely to happen or will support our level. So let's use an indicator here, and we'll look at potentially a relative strength index to see if we can get a level in terms of describing this as an overbought or oversold level in the market here. So as we can see with our relative strength index, this market is trading up quite strongly from support levels, and it's just around our 60 level. Okay, so it is approaching in a structured way or method up towards our 70 level. So perhaps we just need this to trend up just a little bit more in and around these prices to look for some technical confluence to confirm that this is a sell signal. This market has been overbought in around our 70 level. Let's wait to get that confirmation. But again, it is supportive that the market is approaching those overbought levels. So that's again one piece of technical indication we can use to support a possible trade decision. Let's look at the overall trend, and we'll sort of moving average here in terms of defining the overall trend structure. We'll choose a 100-day simple moving average, and again just place it over the market. We can see how the trend structure is quite flat in terms of the overall movement of this price action. Again, it's just overall trading to the upside again. So we're not effectively approaching this area for quite some time. We have levels of around the 77 market before this overall trend starts to converge and trade to the upside. So perhaps, guys, we look at the moving average to suggest, well, a buying signal would not be agreed upon until we breach our moving average to the upside over the 100-day moving average period. That perhaps when we see price action turn over around these prices here before breaching a level, we can look for a signal to take a long-term short trend. That may be the case. Let's move across to some more technical analysis to add some confluence to our decision. And again, if you're familiar with the Fibonacci retracement, we can use that to describe a swing high or swing low within a marketplace. What I'll just do is remove this one level of support and look to use the Fibonacci retracement. Again, you can actually place it here by going to insert Fibonacci retracement. In terms of the overall medium term structure, you look to trade it from the long term high, given this market is trading to the downside, to the long term swing low in the market. And again, we just put it from reference point high to low. Again, what we see that if we believe this market is continuing to trend to the downside, then we'll believe that we want to find the best risk reward for a short-term trade. Again, let's see how the market reacts around our 38.2% retracement level. Here is the term structure. We're trading to the downside with Fibonacci retracement. The market has pulled back from nominal levels of lows. It's breached our 23.6% retracement. Again, if we're looking to get a perfect setup, we look to this market to see if it reverses off the 38.2% retracement, doesn't show a sign of retracing from, of course, the overall trend structure of the moving average over the 100-day period. Looks to reverse off the price channel itself in around these levels here. And again, our RSI is starting to come up just around our 70 level. So if we get a little burst and a reversal in around these levels, we might see this touch our overbought level. And if we get the reversal signal from around these levels, we have some very well informed technical analysis to suggest, guys, that there is something going on, that we can make the trade. And again, if I just delete some of this annotation on screen, let's say we zoom in on the price action here with the technical analysis, it may allow us a good risk reward on the trade. And that's what trading is all about. Okay, let me go through this in some detail. If we get this, I'll use a green pen just to construct a candlestick here, trading up just to this level. Again, this is our green candlestick, and then we get the reversal signal from this level. So say the next candlestick is something like this. That might be our signal to sell right at these levels, because we're reversing off the Fibonacci retracement. We're reversing off the moving average over the 100-day period. We've just breached and are looking to reverse again the term structure of the price channel. We have our series of technical confluence here with our series, of course, of lower highs. And again, this will be still a lower high around these levels. And then that might constitute again the technical trade to the downside.